In this video lecture, we're going to look at activity-based management. Now, this is an extension of activity-based costing. The concept of activity-based costing evolved around the product cost, the need to allocate more accurately the manufacturing overhead to the different products or services that a company produces. An extension of that is what's called activity-based management. And our goal here is to improve the efficiency and effectiveness by analyzing and costing all activities within a business. Now, ABC, for product costing and services, looks at the resources are traced to the activities to facilitate the costing of the products or services. That's activity-based costing. Activity-based management is the same idea. We are looking at the resources that are traced to the activities, but then we focus on the activities, we manage those activities, we evaluate those activities. And if we can reduce the number of times an activity is performed, we should be able to reduce the cost. That's the idea here. Now I'm talking period costs and product costs. Activity-based management, you begin by determining the major activities. Then you identify the costs or resources consumed by these activities. And then you look at the output of the activities. What am I actually trying to achieve here? What is the performance of this activity? Why am I conducting this activity? And then I identify ways to improve on the efficiency and or the effectiveness of that activity. Now, the whole idea of cost allocation involves because we have indirect costs that are associated with many of our cost objects. These costs are indirect, so they cannot be traced, they cannot be measured accurately. They often comprise a large percentage of the total overhead costs. So the purpose of allocation then is to provide information for economic decisions. We want the full costs. Not just direct material and direct labor, we want the overhead. And to motivate managers and other employees. Now I'm talking across the whole value chain. We look at the activities in research and development, in design, in production, marketing, distribution, and customer service. And those are the 6 function value chain. Now the customer service part is interesting. This has been a new process where we're looking at evaluating the cost of a customer. So customer profitability analysis is the reporting and analysis of revenue earned from customers and cost incurred to earn those revenues. An analysis of customer differences in revenue and cost can provide insight into why differences exist in the operating income earned from different customers. Customer revenues, of course, are traced directly. We consider the pricing discount taken by that. But the rest, you see, the customer consumes a lot of our resources. We deliver to them, we service them, we do follow-up. And we now are going to look at all of those activities and what drives those activities. And that is how we're going to do customer profitability analysis. And the best is the example that will follow in the next video. Now, once we evaluate the customer profitability, we want to retain that customer. So now we're going to manage that customer a little better. We understand what resources that customer is consuming of ours. And if we can get him to change his behavior, we can reduce many of our costs. And that is how we apply activity-based costing to period costs like customer service. And in any other part of the business, managers in every functional area should be looking at activities, costing activities, and analyzing activities. So now I have a case that I would like that would follow this called the L. Lane water